I'm going to tell you real stories of credit repair success that you must hear. These are not made up. These are not generic. These are real people with real situations who did what they needed to do and got their credit scores up. The first story is about a woman named Shayla. She was trying to buy a home but was denied a mortgage because her score was too low. When she went to the bank, they told her that she would need at least a 680 score to qualify for the loan. So she went online and found a company that helped people increase their credit scores quickly. After working with them for just a few months, her score went up by more than 100 points and she was able to get the house she wanted. Another person is Brian. He had bad credit from years ago that was hurting his ability to get approved for new credit cards or loans. After using a credit repair service, he was able to remove negative items from his report and raise his score by over 200 points in less than 90 days. Now, he can qualify for better interest rates and terms on his car loan or mortgage if he chooses to finance those things in the future. In another case, we have Jessica who needed a personal loan of $10,000 to consolidate some high-interest credit card debt into one monthly payment. The lender told her that since her credit score was so low, they could not approve her for the amount that she needed at the interest rate that she qualified for. It would cost her nearly $18,000 by the time it was all paid off. So instead she decided to use a credit repair service and boost her score by more than 100 points before applying again. The lender then approved her for the full amount and the lower interest rate saved her thousands of dollars in interest payments over the life of the loan. And finally there is David. He tried buying a car but was denied financing because his credit score wasn't high enough. After disputing negative items on his credit reports with the help of a credit repair company, his score increased significantly, and he was able to get the car that he wanted and save money on his monthly car payment. These are just a few examples of people whose lives were changed when they took action to improve their credit scores. Now let me tell you my own story. It all started when I was getting ready to buy my first home. I was so excited to start this new chapter in my life, but I soon realized that I needed to fix my credit score. My score was in the mid-600s and I needed to get it up to at least 740 so I could get a good mortgage rate. I knew that this would take some time, so I started working on it right away. I gathered all of my credit card statements and loan documents and started disputing any negative items that I could find. After months of hard work, my score finally went up enough for me to qualify for the home loan. And when I tell you that this process was frustrating, exhausting, and very confusing, I am telling the truth. But once I saw that first glimpse of hope when my score went up 100 points, it motivated me to keep going. But something happened. As I continued to look into credit repair, I found out something that shocked me. I discovered that there were companies out there that could do the same thing for people like me, only much faster and much easier. So, I decided to try it out and see if it worked. And let me tell you, I was blown away by the results. In just a few months, these companies were able to help me increase my score by more than 200 points. I couldn't believe it. I was so excited that I could finally get the house that I wanted and not have to go through all that stress. This experience inspired me to learn everything I could about credit repair. I wanted to know how it worked and how I could help other people improve their credit scores too. After studying everything I could get my hands on, I realized that there were three main credit bureaus: TransUnion, Equifax, and Experian. These bureaus collect data from credit grantors and then compile that information into credit reports which are used to calculate credit scores. A credit report is basically a detailed record of your credit history, including your payment history, amounts owed, length of credit history, new credit, and types of credit used. Lenders use this information to determine how likely you are to pay back a loan. And that's where the credit score comes in. It's a numerical representation of your creditworthiness based on the information in your credit report. Now let's talk about what's on your credit report. First up is your payment history, which makes up 35% of your score. This includes whether or not you've made your payments on time and in full. If you have any late payments or accounts that are past due, that will negatively impact your score. Next is the amount of debt you owe, which makes up 30% of your score. This includes your credit utilization ratio, which is the amount of credit you're using compared to the amount that's available to you. The lower your credit utilization ratio, the better. Let us say you have a credit card with a limit of $1,000 and you use $500 of it. That means your credit utilization ratio is 50%, which isn't great. But if you only use $50 of that card, then your credit utilization ratio is only 5%, which is much better. Next is the length of your credit history, which makes up 15% of your score. This includes how long your accounts have been open and the age of your oldest account. The longer you've had your accounts and the longer your credit history, the better. Next is new credit, which makes up 10% of your score. This includes how many new accounts you've opened recently and how many hard inquiries you've had. Hard inquiries happen when a lender checks your credit report when you apply for new credit. The more hard inquiries you have, the lower your score will be. Finally, there's the types of credit you use, which makes up 10% of your score. This includes things like credit cards, installment loans, mortgages, and auto loans. Having a mix of different types of credit can help improve your score. So now that you know how your credit score is calculated, let's talk about how to improve it. One of the best ways to increase your credit score is to make on-time payments. This includes paying your credit card bills, student loan payments, and any other debts you may have. Payment history makes up the largest portion of your credit score, so it's important to make sure that you're staying on top of your bills. You can set up autopay to make sure that your payments are always on time. Or you can use a to-do list or calendar to remind yourself when bills are due. Another way to increase your credit score is to lower your credit utilization ratio. This means that you want to use a small percentage of the available credit that you have. One way to do this is to pay down your balances before the closing date of your credit card statement. That way you'll reduce the amount of debt you have before the billing cycle ends. You can also try to avoid using your credit cards altogether until you pay down your balances. Next is to increase your length of credit history. One way to do this is to keep old accounts open even if you don't use them anymore. You can also try to become an authorized user on someone else's account. That way you can benefit from their positive credit history. However, be careful with this one because if they have any negative items on their credit report, it will also show up on yours. Another tip is to avoid opening too many new accounts at once. Opening too many accounts in a short period of time can negatively impact your credit score. If you need to apply for new credit, try to space out your applications over time. You should also avoid applying for credit that you don't need. Each time you apply for credit, the lender will do a hard inquiry on your credit report, which can lower your score. Only apply for credit when you need it and you're sure that you can qualify for it. Finally, you want to mix up the types of credit that you use. Having a mix of credit, such as credit cards, installment loans, and mortgages can help improve your credit score. If you don't have access to certain types of credit, you may want to consider getting a secured credit card or a credit builder loan. These are designed to help people with bad or no credit build a positive credit history. So there you have it. Those are just a few tips to help you improve your credit score. Remember, it takes time to build good credit, so don't get discouraged if you don't see results immediately. Be patient, stay consistent with making on-time payments, and you'll eventually see your credit score go up. And if you're looking for more specific guidance, you might want to consider using a credit repair company. Just be sure to do your research and choose a reputable company with a proven track record of success. Don't fall for any promises of quick fixes or guaranteed results, because they're often too good to be true. As you can see, there are many options available to help you improve your credit score and achieve your financial goals. With a little bit of effort and patience, you can improve your credit score and get the mortgage rate that you deserve. So if you're struggling to get approved for a loan or you're just looking to improve your overall financial health, consider taking action today and see what a difference it can make in your life.